Okay, hello everyone, and welcome. Today is Wednesday, May 20th. Michael Boutros here. Good to be with you guys this morning for this live intraday strategy webinar on SB Trade Desk. Stefan, Terrence, Permendra, got the whole team here today. Great to see you guys this morning. Terrence says, hi, Mike, on vacation this week. See you after the holiday. Hey, man, enjoy. Good to have you on the webinar nonetheless. JD, I did send you a note. So guys, there's been a request for to move the webinars up by half an hour so we get more time before the opening range. It's a time restriction on my hand right now. It's something I'll take under consideration for sure, but if there's a large request for that, we're more than happy to oblige. So as always, as we've continued to note, guys, your feedback is absolutely paramount as we continue to build out the service. There's a lot more coming down the pipeline, and your guidance is extremely valuable to us. So thanks for that, Stefan. Let's jump right in. The euro is on the long side. We just missed a long side trigger. I was literally about to jump into this position right before the webinar. Wanted to see if we made it through this near-term support here, right around 111.35. Former support, now resistance. Looks like we're going to punch through. So on a basic objective note here, guys, heading into the FOMC, obviously, likely see some profit taking on the dollar. This is the retracement you want to work with if we make it through the highs that we made yesterday in Asia. So let's clean that up real quick. So if we make it through the Asia highs from yesterday, again, possibly look for resistance right at that median line, again, dating back to the highs that we made, a few weeks back here. So we'll come back to the euro in a second, guys. I just wanted to show you it is on the move here. Here's what the relative performance versus the greenback looks like as we open up the session. You can see big shift here. With the pound, CAD, Kiwi, all showing some stronger moves here as the dollar continues to give back some of those advances. Now, the dollar index, which we've continued to watch, came right into resistance. It didn't quite make it into the median line. Actually, we just did on that spike. So we've now sort of come right into median line resistance. Remember, this is where the risk was for a dollar turnaround. We've been talking about this on Daily FX and in the webinars here. You have the 200 or the 100-day moving average sliding right in there, the 2009 highs. Obviously, the major pivot from the January-February open, the opening ranges for February and the high stretch that we made here in January. Really nice region of resistance. You're seeing some pullback here, momentum right on cue. Okay, so we're a little bit we're curbing our appetite for any long dollar exposure, especially heading into the FOMC later this afternoon. A quick note on that is not likely to be anything earth-shattering, guys. FOMC release minutes can sometimes be a great trade. I don't think in this specific scenario we're going to get all that much volatility just on account that the policy statement was pretty in line with expectations. Wasn't any deviation there from what the broader market consensus was. So unless there's something in there that's a little bit more concerned about the global picture, what's going on in Europe, the slowdown or the lack of pickup, let's say, in inflation, I don't think we'll necessarily get all that much play. That being said, the dollar's at risk well below this region for a little bit of a pullback here. Remember, this was the invalidation level, okay, earlier in the week, 11,737. We talked about it. It feels like forever. The lows that from February, the 236 off the low from July, and the lows from April. So that's going to be near-term support, okay, on a pullback here. And really the downside targets, if we do break back below that, you're looking right back at that 11,664 level. So greenback heading into resistance right ahead of the FOMC. Okay, and that release, guys, is at 2 p.m. Eastern today. Obviously, the major event risk as far as the economic data front is going to be heading into Friday. You get the consumer or the CPI print rather for the United States. So the inflation picture has been the laggard of the Fed's dual mandate of price stability and fostering maximum employment. The employment figures, while the participation rate remains at multi-decade lows, the broader headline unemployment rate is pretty much in line with where the Fed wants, and that leaves pretty much inflation for them to really be able to start picking up and normalizing policy. So we'll see that print on Friday. We are expecting a slowdown. Looking at the U.S. equity market right ahead of the open, here's what we look like in Europe. You got a mixed picture. Obviously, yesterday got a really strong rally across the board as you got some of those comments from the ECB saying that they're going to ramp up QE operations. long story short, you're not seeing much of a conviction trade on the risk side today so far. If you take a look at equity futures in the United States, it's pretty similar. A little bit higher across the board, Dow up 17 points, but S&P about a quarter of a point up ahead of the open. So, with that said, let us jump into the intraday charts, my friends. Let me know if you have any questions or trade setups you guys also want to take a look at. We'll take a quick gander at some other trades that we've been following. Sterling CAD, Sterling Yen. I saw a question here from Stefan. We'll definitely take a look at Sterling Yen. Euro CAD is also one I've been watching very closely. And obviously, we'll start off with the intraday page. So here's what the Aussie dollar did last night, or here's where we were last night. And the expectation, again, was that 78.83 level is going to be pretty big. Okay, this is the median line that's on the daily chart. I'll show that to you in a moment. And it also converged dead on with the operative median line off the high. Real clean. We haven't, when you get these guys, they're really, it's awesome to play because when the market continues to follow them, it gives you very precise touch points. And you can see on the decline here, although we got that break, which tested our invalidation level at 80, by the way, the other day. I talked about this yesterday. Quickly recovered, and then again, downside break below 79.65. Continue to keep the short side in focus. So here's what the live chart looks like for Aussie. Remember, 78.83 was sort of where we were looking for this thing to taper off. Here's the daily chart looks like. Okay, there's the median line right off the lows from February and the low of the year that we made in April. Excuse me, and then there's that median line that caught the lows. So right now, this is going to be, if we close at this level, it would be the 5th consecutive day of declines. 4 consecutive days of declines within an uptrend, as I was saying on Tuesday, is already starting to push it. So I'm very cautious of any further short side exposure here. I actually took a 13 pip stop on this one yesterday, trying to get cute with a long right at that level that we were talking about. So here's what the intraday chart looked like. This long here. So I actually jumped into a long position on account of some of that divergence. We got a trigger break. That put me on the long side. I tell you guys this all the time. 9 times out of 10, I'll take that trade, especially if it's a divergent signal like this, where you're getting, 3-point trigger break at the lows. We were only looking for about 27 pips, so we actually would have achieved it on this rally here, only just ahead of that, heading into a little bit deeper into the Asia session, I literally got spiked out on that pull. It was a tight stop, but market wasn't really following suit, and it'll happen. So no biggie there. We got the stretch into a new Tokyo high. That quickly fizzled at 60, and either way, this would have had you looking lower again. Okay, so we eventually did test the upper median line parallel, and we did go right back into a test of that 78.83 level, which was the target noted on yesterday's piece. Okay, so at this point, you still could get another low and a tag into this trend line, but the risk is still that you see this thing start to show us a little bit more of a recovery before it continues lower. And that's on account of a couple of different things. Again, you're getting some divergence into these lows. And on the daily chart, we just noted you're coming off of that major median line. So I'm cautious again about trying to press any shorts from these levels. We'll see if we can get that topside break. And this is the same bearish invalidation level as yesterday, guys. So the highlighted region, median line resistance. If you do see a pop there, you look for a rally back up towards 79.65 as just an initial target. And as in the euro, such a scenario, if you do see that topside break, you want to tack on a quick retracement, just to give you some levels, and see if it coincides with any of the soft targets we've been noting. And if you do that, 236 comes in at 79.50. 80.22 comes up as the 50% retracement. And 80.22 on the daily chart has already been highlighted from a long-dated 100% extension. This dates back to 2013. Okay, but has been a clear pivot in price. So the levels for the Aussie are good. 78.50, 78.40 still could be a possibility. That's going to be a major level as well. That actually accounts for 50% of the retracement right off the lows. You can see it there, sort of that purple color. That's the next downside target. That's the risk with a break of these lows. Remember, this is also last week's low. So the levels are pretty clear. And that would be this drop right here, guys, on the daily chart. Okay, into the 50% retracement of the range from the rally. So the levels on both sides are pretty good. Again, near term, I think you might see a topside break here, a break below 78.80. We got a nice 30 pip, 40 pip drop here into that 50% retracement. I don't think you're going to get much of a trigger here, but let me just see if these highs attain anything. Yeah, could be pushing through. Remember, 79.20 is really going to be the bearish invalidation level. This is kind of the region at this point that we want to clear to get the sort of reversal signal to start looking higher in Aussie dollar near term. Also, I just want to note one thing, guys. Heading into things like FOMC, typically I won't be holding scalp exposure. If you are in a scalp and you head into the FOMC release, it's a good idea if you're in the money to take some off the table, bring some in, as such. But just be careful. Sandy says, I get into long euro dollar and short dollar yen. Mike, please, good morning. Great to see you. Dollar yen, I haven't really checked out today. Let me take a quick look what's going on there. Short dollar yen from here makes sense. That was an extension that I was looking at. I think it's a longer dated one, Sandy, to be honest with you, just above 121. I think it was 100. There it is. 121. Yeah, that's 100 off the low. So I've been watching that level. Not a bad area to start to turn around. We'll go over this in a moment. Let's jump into the euro since you want to talk about that. That's the third scalp on today's intraday page. Guys, if there are any other questions on the Aussie, please feel free to throw it out. Excuse me. So here's where the euro is trading last night. And here's where the euro is trading right now. Okay, and get rid of this retracement just for a moment, guys, to kind of compare the charts. So, wasn't involved in this. The break didn't happen until early the wee morning hours here in New York. Took out the Asia lows, took out the U.S. session lows. I was weary of any short exposure beyond this on the account of the divergence that we're getting. The momentum has been very bearish since the start of the week. And we made a dip right into the 111 target, 110.94. And then the low, 110.65, that's not actually a fib, guys. That's just a low from May. It's the May opening range low. Got tested almost to the pip before a quick reversal and snapback in European trade today. Adds conviction, actually, to the argument I was making last night that this thing, could teeter out as you get into the session today, specifically if people start sort of weaning off and start closing out some of that dollar exposure ahead of the Fed. So I'm not really surprised to see this. I was looking for topside triggers. Again, here's what the scalp looks like on the 5-minute, guys, for the euro. There was actually a nice hold right here at 40 on the pullback. That's something you want to pay attention to. Look since the start of European trade yesterday, guys. The momentum signature has been pretty clear. Now, again, you don't want to overemphasize things on a 5-minute chart ever, right? Because it's real near-term price action. But it's still something that you can reference when you're trying to ascertain whether there's a change in behavior. That's all we're doing. We want to see if there's a change in the behavior of what momentum is doing. So 40 break, 60 hold, 40 break, 60 hold, a 30 break. That's still bearish as can be. Now 60 hold, but on the pullback, that's the first 40 bounce that you saw of magnitude, right? And then we took out the highs in price. That's the first time that you actually reversed and took out the highs again. And that's the first 60 break that you saw. Okay, so there's a couple of things that you want to look at there, and that suggests near term that you could be seeing momentum start to turn. Now, we're still holding that 1135 target. We were talking about the open of the webinar. That's the resistance near term, Sandy, that I'm looking at. I know it's been we sailed through it here on the way down, but there was a lot of strong momentum here. And when momentum is in oversold condition, expect to see these drops below your levels, guys. It's just there's so much push behind it. It's like a cascade effect. Although there's resistance, it's going to overrun it. It's going to overshoot it. Sometimes we'll call it, you'll hear us call it, we'll overthrow. So this would be like overthrow of resistance and then a comeback. Same type of gig here. But long story short, it was a very nice low that we made last week. And it's the 786 retracement from the advance off the lows for the month. So this takes into account, that first leg up there. Long story short, near-term resistance, topside break, and you're basically looking for this median line. Okay, that puts you somewhere in the range of, like, depending on where you are in time, just below the 112 handle. Sandy, does that help? As far as the risk to the downside, 1094 is where I'd cut that out, or basically the low that you made here on that pullback. That's a target that we were watching on the daily chart. And here's what the daily chart for the euro looks like. I always like to start with the daily and scroll down, but you guys get the picture of what we're looking at here. The reason we started to fade off the shorts for the euro, and the reason why, yesterday in the piece, I kind of said that we're completely out of the euro shorts at this point, is that look at this region, guys. Okay, this is something to pay attention to. You see how many times we came into this? This was the opening range low for the month, was exactly that median line support. We ripped into the highs, nice resistance hold there, pull back, again, median line support. Note that longer dated pitchfork we looked at yesterday as well. Okay, then we saw a bounce, again, turned right ahead of the median line resistance, but right same region, all at 111, 110.94 was the actual stretch low. But in any event, you want to kind of really watch this region as support as we go into the session today. Momentum gave us the break yesterday, so from a momentum standpoint, it has the potential to push lower. You have divergence into the highs, a higher high in price, equal highs in momentum. Okay, and all this does shift the near-term focus to the downside. That being said, you're at support. Okay, so you really need to see a stronger push sub 1094 here. And then I think you look for our target somewhere around the 50% retracement at 109.90. Near term, though, if you see that rally, look for that median line resistance. Sandy, you're more than welcome for that. Stefan says, do you take into account the possible turn in the dollar index as well in favor of the long side? Or do you really try to look at the pair versus its parts? It's a great question, and it's something I talk about in the webinars a lot, Stefan. So I try not, let me take a step back. The dollar index is a great representative of base dollar movements. Okay, the reason I like this index is because at its inception, it's equally weighted. Euro, Aussie, sterling, yen, the four most traded, four most liquid currencies against the dollar, right? The ICE dollar index is so heavily weighted to euro that a lot of times when there's a big euro move, that thing is very skewed and Eurocentric, which kind of doesn't give you that type of clarity. For me, I use it as a base reference, Stefan. I'm not going to necessarily not take a trade because of what I think about the index, but certainly if I'm looking to take, for example, a euro long, and I see that the index is at resistance, that gives me further conviction. Stefan, if that wasn't the case, and I'm looking at a euro long, and the index still has lots of upside, right? Maybe that euro long position, maybe I won't take as big a position, right? Instead of X slots, maybe we'll take, 70% of that size. Maybe I'll trim down the position size just because there's a couple factors working against me. But, every trade needs to be taken on its own merits. And that's the thing that we really stress here. Something that me and Jamie are very passionate about. A lot of guys will try to correlate, well, if euro yen's doing this, dollar yen's doing this, and euro dollar's doing that, then I can sort of try to play. If you try to get too fancy with it like that, guys, and you overthink things, just makes a huge mess. And then you don't even know why you're holding a position. Somehow you derived it by some means of calculation. You know what I mean? We try to keep it as simple as possible. We trust our technicals, we trust our experience, and in that way, every trade is taken on its own merits. So, Stefan, I hope that kind of gives you a little bit of a picture there. Raj says, why is the midweek webinar changed to tomorrow, Mike? So guys, Jamie's going to move his midweek webinar till tomorrow. It's going to be the release of the FOMC minutes today. He's not an event risk trader, guys, and he wants to go over the swing setups, and it's not really the best time of day on FOMC minutes release day for him to do his webinar. So we're going to shift that to Thursday, give you a little bit better of an outlook for the coming week, and that'll be at the same time, all right? Raj says, okay, cheers. You got it, man. Stefan says that helps. Cheers, sir, to you as well. So, any questions on the euro setup? We don't want to get too aggressive, starting to fade the move yet. Again, remember FOMC minutes later today. But the risk is for a topside move here if we do clear, like I said, those highs from Asia, those highs from Europe last night. And again, on a downside break for the euro, guys, very clear target at 109.92. Obviously, depending on where you are in time, you're basically looking for that lower median line parallel to come into play. Okay, the highs, the opening range high from April, also comes in just ahead of that region, 110.20 or so. Actually, let me give you the actual figure, 110.34. Okay. So that is the euro. I see a lot of questions here on a couple of guys want to take a look at sterling yen. Eileen says, me too with the euro dollar. Thanks for the extra explanation. Hey, you're more than welcome for that, Eileen. Let's go over sterling yen just because I see a couple of guys are looking at it. Here's what we looked at yesterday with sterling yen. Or here's what we're looking at this week. Remember the major key resistance, 188.22. That's still in play. Nothing has changed. The only thing that's changed now is, aside from those fibs being there, you also now have the median line right off the low, which has been crystal clear as resistance, and that also, coming into today's trade session, is coinciding or converging on that region. Nothing's changed on this whatsoever. I'm still constructive of the broader trade. I'm not too keen on trying to get short unless we get back into this region as close as you can with a short trigger. Looks like that short trigger is still kind of finicking its way down. I don't see anything in price that allows me to do anything with this. But here's what the intraday chart looks like, and it's very clear on account of the weekly opening range. Here's your weekly opening range, guys. We talked about this yesterday. It looked like a break, clear and simple, of the weekly opening range. And not only that, when we came back to test it as resistance, it held. Right here, that invalidates it. You're right back in the weekly opening range. So again, the focus goes to 188.20, that same region we were all looking for in the daily. Only now you've got to extend the opening range down to 186. Okay, so at this point, we're going to shift that near-term bullish invalidation level up to the lows for the week. We're going to shift it up to the convergence of median line support. Here's what the broader structure looks like. Okay, so you could see a stretch back into 88.50 even, test those highs from last week, but you're still butting up against resistance. It's an uptrend at resistance. So for the guys who are looking at sterling yen, who was that, Stefan? Right, Stefan's looking at sterling yen. Raj is looking at sterling yen. Can you look for a short, please? I mean, that was the idea as we were heading into the start of the week, okay? The idea was a short, and that's why when the opening range looked like it broke here, it looked like a clear play, right? You finally made it below that near-term structure that we were looking at and the median line, and it looked like a clear break, test as resistance, move off, right? The recovery here threw us right off. As soon as we get back into the opening range here, you're back in. I actually took a short here on a 5-minute trigger. That one got stopped out at break even. We didn't take profit on the pullback here. I thought we were going to get some follow through, and then it came right back and stopped me out at break even. But here's what it looked like on the intraday. Right here. So this is sort of what I was working with. Wasn't the cleanest trigger break, but as it came into these highs, obviously you made a swing high here, divergence, which tagged the former trigger support. So I kind of jumped into a short here. Once we moved below that low, literally below the low for the opening, or below the low for that hour, I think it was 86.80. We got that deep. Maybe it was 90. In any event, we brought it down a stop to break even, and then it triggered on the way back up. So now that we're back into the opening range, I kind of still want to see what reaction we get if we get back into that region on the daily. And again, this is going to be the near-term bearish invalidation. The objective target is still going to be 190 on this stretch. You got the R2 monthly pivot, the highs for December, 100% extension off the highs. It's loaded up there. And again, 85.36 on a broader scale is the bullish invalidation level. So even if you do get a stronger pullback, we'd be looking to buy that sterling yen correction. Questions on pound yen? for Raj or Stefan. I think both of you are involved in this one, right? Stefan says, I'm good, thanks. All right, cool. Mark says, Mark, you're talking about the euro, right? Good point. Good point. Mark says, in reference to the fact that the euro made those 3 bounces on this. Mark says, but one could also contend that support was tested 3 times. Now it broke, and it seems it's just testing as resistance now before going back down for the euro. Good question. For me, Mark, a stretch low doesn't mean anything, which is why sometimes when you see my fib levels, guys, if there's a really high or low emotional stretch, for example, which one was it? It was the FOMC a couple of weeks ago where you got that major stretch to the upside in the euro, right? I don't like to use those as reference points, and I don't count those as breaks. For me, to validate a daily trend break, it needs to be, it needs to be a close, Mark. So I don't know if you want to count that as a break. A lot of times if you're looking at trend line analysis and stuff like this, so would you have counted that as a break, Mark, of trend line resistance there back on the 7th? I mean, it probed through, but that session closed down here, right? So that's the thing with me. I mean, even if it probes down here, if we end up closing higher on the day, I'm not going to count that as a break. He says, no, but taking the RSI break into account. Again, now you're starting to stress the RSI too much, right? That's why. Yeah, this does give us a downside signal. You're right. But this could be the magnitude of the move. I don't know, Mark. Right? And momentum could come right into 50 and find support. So I don't want to necessarily stress that. And even more importantly, Mark, RSI is based only on the close, right? Right? So it doesn't even matter if RSI looks like it's sub 40 intraday, and then the market recovers, it'll look like it never even stretched there. So we got to make sure we're taking into account that the RSI signature is only pegged to this, only gets pegged once the close happens. So I hope that offers some clarity on that. Mark says, oh, not closed yet. Forgot. Yeah. So the closes are going to be, absolutely critical. He says, thanks, exclamation point. More than welcome, Mark. More than welcome. Good point, though. Good questions. I like where you're looking there. All right, so that's the euro. Last but not least, we'll jump into the Kiwi real quick, and then we will go into some more of your questions. Maybe take a look at some of those other crosses that we were looking at. So here's Kiwi dollar on the daily yesterday. Lackluster on the daily chart. Really, the intraday was highlighting this turn ahead of 73.27, 73.22, which was the target here after we broke the downside of that median line again. Here's what it looks like on the daily. Still watching that same low. Here's what it looks like on the 30-minute. We finally tagged it last night. Okay, so it's the same level of support that we're looking at. Divergence into the lows. Price action, making a lower low. And again, even on the 30-minute chart, pays sometimes to bring it into a line chart just so you don't fool yourself with any of the wicks and the tails. Lower low in price, a higher low in momentum. Slight divergence, not necessarily something you want to operate off of, but telling you a little change in behavior here, right? We haven't seen any 40 holds on the pullbacks yet. We haven't seen any stretches into even 60, so it's too premature to start looking higher, in my opinion, just yet. But it leaves the downside vulnerable, which is why we haven't really done anything on the Kiwi since this stretch here. I'm going to want to see a break above the median line resistance. In fact, we got a false break here. We talked about this yesterday. Other than that, still been pretty clean within the operative pitchfork here for Kiwi. This was a trigger that gave out last night with a failure to hold above 50. Again, if you read the notes, if we had broken the median line, we're looking for a possible move into 73.80, and this is the bearish invalidation level. We didn't quite make it that high before that trigger gave out, and actually the pullback finally went into that key support zone. If you guys remember, this 100% extension, just to give you some reference, this is the 100% extension from the measured move, okay, that double top scenario, and then this 100% extension is actually that first leg down. Okay, it's not really stressed at this point. But since it caught the lows for that last week dip, that's why we have it there. And lo and behold, we're doing it again. Break lower 73.06 is the actual more operative extension off the high. It's this one, taking into account the broader decline. And that comes in again at 73, just above the 73 handle. And this is an example, guys, for those of you who are trying to get more tuned with Fibonacci. This is an example of a stretched low. You know, this low that we made, what was this on? I think this was on the RBNZ, something out of New Zealand. In any event, an emotional low that different platforms will have at different levels based on how, wide the spreads flew out. So it's always better to take a little bit more of a concrete measure in price. And as I said, near-term bearish invalidation will bring it down right here, right on 73.60. Basically, you're looking for the highs that you made yesterday in Asia. Okay, so break above that. We'll look to play the topside targets. Just as in the euro, you tack on a quick retracement, and you'll play those topside objectives. A downside break, and again, look for 73. Look for 72.80. Being a 786 retracement, and I think this is actually a pretty decent pivot in price if you go back. Yeah, those lows for March come into view. But this is a pretty big support, or a pretty big region of support here initially for the Kiwi. We'll look for a break below that to maintain that downside bias. Sterling taking off, but timing with FOMC and the time of day. Move not valid, says Eileen. Here's British pound. Yeah, I'm not too thrilled with the pound, Eileen. We've been talking about this for the last couple of days. I like the pound crosses better. Pound CAD, pound yen. Now that we made it, yeah, this is actually an interesting level here because this is the high close for February. Let's see what the near-term chart looks like. Bear with me, guys, just one moment. Let me snap some of these levels. There we go. Okay. Looks like that slope has a little bit more touch points, so I'll focus on that right now. Okay, so this is going to be the first break above 60 if you make it in momentum that you've seen for the week. It's the opening range high for the week. Okay. Yeah, it looks like you're putting in some sort of near-term reversal here if you make it through 155.60. So I'd be cautious. I'd be cautious on trying to do anything here on the long side from sterling dollar at this level. And ahead of FOMC, Mark, thanks for that. He says trend line off the highs also coming into play right here. Yeah, it could be a breakout. I don't know if I'd necessarily jump into position right ahead of the U.S. Open, but could be a breakout if you make it through that and you finally get a 60 pop. That would be a change in behavior. You do have a trigger that has given out at this point with this move. So that actually would have been a nice long trigger with a break of the highs that you made for Asia Pac against the low there. That actually would have been a really nice long scalp for the pound. Again, I'm not really too thrilled about the pound dollar. Let's take a look at some of the pound crosses. That's what the focus has been. So for pound yen, we kind of took a look at that earlier. That's still focus is on 88.22, 88.30 as near-term resistance. Another one we were looking at is pound CAD. Here's the pound CAD looks like on the daily. Okay, very similar scenario in that you're butting right up against a major resistance. This resistance confluence means even more to me because, again, we talked about this briefly yesterday. Favorite setups: 1618 extension right off the low, 618 retracement right off the high, confluence with a current operative median line resistance. So the pullback off 90.40 was also a decent play for a short side sterling play. But now that you've recovered, you're back above the median line and you're testing that resistance. It puts the risk for a breakout still. Does that make sense, Eileen? So, that's the only thing I'd be concerned about for the sterling dollar. This is the sterling pairs that I would be a little bit more focused on. Sterling CAD on the 30-minute looks like this. So again, even on this one, the near-term structure, right, very clear, and the opening range for the week couldn't be clearer. So although you haven't gotten the clear directional break yet, the levels are just right on point, right on point. So you're basically looking for a break below this to play the short side, a top side breach, and we're right off on our ways into 192.50. Would be a nice 786 on that, and then the upper median line parallel takes you into the 94 region. Eileen says, "Yep, makes that sense. Okay, thanks for the extra picks for the sterling. I see it. All right, right on. And as always, if you're newer to the room, guys, remember you can always click on the camera on the top of your GoToWebinar screen to grab any screenshots of any of the charts that you're looking at here today." And Mark says, "Thanks, Eileen." You just went short. I like this. I like the setup. Cheers to that. Like the crosstalk. Anytime, Mark. Andy says, "Can you give me your perspective on the Aussie Kiwi? I have a swing trade short, 108.47. Yeah, let's take a look at that pair. I always talk about that pair with my buddy David Song. He loves it. Listen, the 618 at 108.12 is still what I'm focused on. It's been messy on the break to the upside, but the only other thing I'm looking at is this basic. It's not even a median line. It's I guess you can call it a median line. Basic pivot here. You see that? 1 point, 2 point, 3 point sail through. Charges a break. Resistance. Resistance. Almost caught the high to the pip there on that rally. So for me, this is the consolidation break I'm looking for. Period, end of conversation. There is not really any validation here for a continuation higher yet. There's no validation to play the pullback yet. That's sort of what I want to see break. If we make it back below into the confines of that median line, sure. Yeah, look for a short back into 106.60. Look possibly into even the R1 monthly again. If it breaks the highs, I mean, I'm of the mindset that this has made a pretty significant low for the year here. I know the fundamentals may, there's different opinions on how this is going to play out, but from a technical standpoint, guys, you've been getting ongoing divergence since the start of the year on the decline. This is the first, change in behavior that we've seen in the high stretch in momentum for the pair since, you got to go back quite a ways, since essentially that 2008 stretch, right? Right here. So my point being, the momentum signature and what we're doing in price has us, back above the yearly open. We've now cleared the yearly opening range. We've tried to clear it. We actually closed a couple of days up there. So from a monthly standpoint, from a weekly standpoint, on just a basic yearly opening range play, a hold above 107.90, a hold above the 108 handle, keeps you looking higher. So we're at critical resistance is what I want to tell you, Andy. 108.47 is where you're looking for the short. Yeah, I like the level for sure. And from a risk to reward standpoint, you know where to put your stop. It's going to either be against that high at 108.80, but basically you see that low stretch for September on the left there, low stretch for August, right? Would be something I'd be looking at. That's a median line just kind of popped out at me. Could be also in play. Look, if we're going to get resistance on a stretch like this, this is where you'd expect to see it for the Aussie key. If it plows through, for me, that's all the invalidation I need for any type of short exposure. You look much higher. From a scalp perspective, right? From a swing perspective, it's hard to justify any type of long exposure until you get some sort of corrective pullback, at least into the ML. At least. Andy, does that make sense? Hope that offers some clarity there on Aussie key on the daily. Let's jump into the intraday charts and see how it looks from that standpoint. You might need to reset this, so again, bear with me. Okay, so obviously you can see that these levels are pretty stale at this point. Haven't looked at this in a while, so let's just update this for Andy real quick. Okay. And on a pullback scenario, let's just see if any of these fibs line up. Yeah, this looks actually pretty good. So the levels look good as far as mapping out the targets if we do see the downside break. On its face value on this one, Andy, it's a very basic opening range strategy again for the week. And Aussie keys, the Aussie and the Kiwi and the calm currencies in general are my favorite plays with opening ranges. And you can just see if we look over the last couple of weeks, it's been pretty textbook. Last week was a wash because we started off with an amazing rally in the Aussie. But the week previous, you had a Monday, Tuesday stretch where you held a very tight range. Obviously, you got some volatility on the RBA with that interest rate decision. Long story short, as soon as you broke the highs, look for that late week high. We rallied pretty close to the highs. The previous week, you had a Monday, Tuesday stretch. You broke the opening range. You tested right into the support again, former opening range high. That held, stretched into a new high for the week, and so forth. So this week, you're basically in that consolidation that we looked at in the daily, and here's your weekly opening range. Super clear. And it's Wednesday. So you look for a definitive break either above 108.40, which would invalidate that major resistance. Actually, it wouldn't still. I'd still be cautious on long side exposure here. But for your purposes, looking for the short, if you test the opening range high again and that fails, stop against the highs, and you basically need to see a bank break below 107.40 there. You look for 106.80, you look for that median line support. So sure, it could be a nice game plan actually. But I'd watch that weekly range here to start things off. All right. DJ says, hey, Mike, wondering how you get RSI to show an extreme of 70 and 30 rather than 100 and 0. Thanks. 70 and 30 should be a preset, okay, in your RSI indicator. This is actually an add-on indicator, by the way, DJ. If you go to fxcmapps.com, it's called RSI2. Actually, I'm sorry. This is in fxcodebase.com. There's the link. And look for an indicator called RSI2. It puts the 60/40 as a preset for you, and it also auto-scales the indicator. So you don't have to sit there and kind of, finagle with this a lot. So I hope that helps. JD Divine says, do you map out opening range for yearly, monthly, weekly, daily on your charts. Yeah, I don't actually map them out every week on the intraday charts, no, because it gets too hectic and there's too many lines on there already for me just to stress that. But JD, it's always something to keep in mind on all different time frames. You'll hear people call it the January effect. That's basically the opening range. I tend to think that you get the quarterly opening ranges even for the first quarter set, and sometimes the break of that first 3 months of the year will give you the definitive bias, or the directional bias rather. But you can use OR strategies on anything, on any time frame pretty much, even intraday on an hourly time frame. Again, not a strategy in and of itself, JD, but certainly when you're looking for that added conviction, you're looking for that added trigger, can definitely be a nice add-on to your strategy. DJ says, great. JD says, got it. All right. Moving right along. So that's Aussie Key. It's definitely an interesting trade, and I was looking at this with David from Daily FX for a while, and I kind of just want to see this consolidation break. I don't want to get chopped up here in the meantime, because when this thing makes a move, it's going to make a move, right? But even from an intraday standpoint, the range is not really all that big where it inspires much confidence within this consolidation here. Euro yen is a trade that we were looking at as well. That one coming into a slow parallel here. That looks like it's holding for now as well. Here's what the intraday chart looks like. You got the break yesterday. We talked about 135. Nice confluence region with a basic median line. Resistance, 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 break, support, support, break. That's the invalidation level for the downside. This is the target. Still looking for a move into 133.40, guys, which is basically just last week's low. We're not even looking for something crazy on this. And obviously a 38.2 comes in just lower at 132.80. So we'll see if that pans out. I'm still looking lower. And again, this is just a basic median line off the low. Confluence with last week's low. So another pair that we're looking for, very similar to the euro, right? If the euro continues with this bounce and you do see some further upside, look for 135 to give out. And if that gives out, again, we're going to have to invalidate the short side near term. But looking at this, divergence isn't there like you're seeing in the euro. Again, bring it into a close. You can see that those lows are actually equal, even though you're seeing the oscillator give you a higher low. Equal lows doesn't mean, remember, we're always stressing price. You're always looking for this to confirm or disprove something you're seeing in price. There's no extremes here. So for euro yen, still looking lower, below 135. 133.47 is still going to be the near-term target. Dollar yen. Saw some questions on that. Not my favorite pair. If you guys have been with me for a while, you know this is probably the pair I've traded least over the years. Don't want to get into the details, but long story short, early in my career, I took some massive losses on the dollar yen, and I think psychologically I just never recovered. But long story short, it looks like a simple definitive breakout here. Momentum hasn't really cleared 60 yet, so as a broader turn in price, I don't necessarily feel that comfortable with it yet. Median line resistance coming into view. We just looked at this earlier in the session, but here's what I'd be looking at. Sorry guys, bear with me one moment. Hey, Stefan, you're in the room here, right? I just saw your tweet, my man. I just need you to go ahead through Twitter and submit a request again. If you can get a chance to do that, that's the only thing. We've gotten your SB Squawk request, but we just need you to actually submit it through Twitter. So as soon as you submit that, man, I'll be more than happy to tell the intern to go ahead and accept that, or I'll do it real quick. Yeah, you're more than welcome, man. So for the dollar yen, remember that level that we talked about just ahead in the beginning of the webinar, 121 is actually the 100 off the low. So it is a level of resistance. but I think it was you, Sandy, who's holding a short on this. On account of the dollar pullback, it might pan out, but that should be your bullish invalidation level, okay? Or your bearish invalidation level near term, rather. Let's see if there's any structure to this advance here. Okay, yeah, I'd probably work with that. Might be even cleaner. All right. In any event, it highlights the region of 120.60 again. I would say 120.50. This region here, Sandy, is major support. It's going to be the Asia Pac lows from yesterday. It's going to be that 618 retracement off the highs. It's going to be median line support. And this would be your invalidation level. So a break above the median line, you'd basically be looking for, I wouldn't really stress that 786 as much. Yeah, so I'd be looking for the upper median line parallel, wherever that comes in price. Essentially looking for the convergence right here. And again, this is a 1618 off the low, as well as the highs from December of last year. So we got a nice confluence region right up there. All right, so Sandy, just be wary of the highs here, the session highs for the U.S. session. That's all I would say. The dollar pullback, again, the risk remains for a dollar pullback as you head into the U.S. trade session in about 7 minutes, guys. You could see this stretch into, like I said, 11,854, which is that 2009 high. That's sort of the beginning of the range in the 100-day moving average. But essentially, you know, looking into the FOMC, looking into the close of trade, or heading into the U.S. session today, just be cautious on that stretch there. You know, I'm not really looking to play that stretch. I'm more interested in seeing if this stretch fails. Remember, the break above 11,737 was the signal. We've loved the long side since. This was the resistance target. It's time to start curbing expectations, okay? And that's how you want to really treat this index. Obviously, for those of you trading stateside, we can't physically trade this asset, unfortunately. But again, it can be a nice indication when you're looking on some of the dollar crosses. So I do want to take a second and talk about dollar CAD. You know, this is a very interesting level as well for dollar CAD. It basically a 38.2 retracement from the decline off the yearly high, but I'm also looking at this median line. And that one comes in right around the same levels, and you're seeing that price is sort of starting to fail at 50 right ahead of that. The interesting thing about this, guys, is that 122 is actually the opening range high for May. So we closed above that yesterday. That should actually kick the top side into bias into play. But remember, nothing supersedes basic support and resistance. So even if the opening range breaks and then it gets a 20, 30 pip rally into resistance, that's still resistance, right? So we can't overlook that. So you know, I do think it probably can see further upside this month, but I'm cautious ahead of 122.68. And the intraday chart, structure looks pretty clean. Let me zoom this out. Okay, so you can see that median line off the high, which we broke yesterday. This is what we highlighted yesterday as the top side there for dollar CAD right here in the webinar. We blew right through that, just missed 122.68. Like I said, the high was like 122.54, 14 pips. And then you got some serious divergence into the highs, and as such, the pullback here now testing again those highs from that late stretch in early May. So it's the opening range high. So if we make it back below this, you could see a little bit more weakness. It's the same breakout level we were looking at yesterday. Especially if you see a 40 break in momentum, that'd be the first 40 break you got this week, right? And could suggest that you're in for a little bit of a downside pull. Tack on a quick retracement if you do see that scenario pan out in U.S. trade, and you look for support a little bit lower. As long as we're in the confines of this thing, I think you still look higher. I still think you look higher. Again, nimble on the pullback. If you get a decent pullback, I think you start to press the longs again, possibly here for dollar CAD. GS, I'm not a big fan of trading dollar Swiss still. Sorry, my man. He says, Mike, I know that the U.S. folks can't trade FXCM U.S. dollar index. Do you agree that dollar Swiss is a close proxy and both have a quite high MMR? Yeah, I'm not really interested in trading dollar Swiss. I haven't been interested in trading dollar Swiss since the peg, guys. It's not even on. Here's the intraday chart. I mean, this has probably been updated in like a couple of months. Yeah, I still think you kind of want to just sit this thing out right now and let the smoke settle from the January effect of or from that S&B effect rather of what happened with the whole peg. So this is just not something I've really been focused on or have been tracking. So I can't really agree or disagree with you on the validity of how close it moves with the index. You know, I don't touch anything that does something like that. And by the way, the ATR is still pretty much in line with setups that actually have, in my opinion, some technical merit a little bit more than this. Listen, it could be a great set. It could be a decent pair to trade, and you know, probably some of it is from just my personal apprehension, but I just don't see a need to mess with it. Gia says, sure, just saying the chart looks almost the same. Not on the daily. I don't know where this comes into play, but I guess from a monthly or weekly standpoint, but not my cup of tea. Adeos says, I hope I'm pronouncing your name right. Adeos, it's good to see you in the room. Or Ados says, hi Michael, hope you are doing well. Came in late. I like the sterling yen rally to 189. Any thoughts? So we went over sterling yen. Listen, the only thing I'm looking at with sterling yen is the near-term resistance range that we're eyeing down at 188.22. This is huge for me. If we get that, I'm with you. 190 is definitely. I'm actually looking at 190, 189.70, 190. This region here. If we do see a topside breach, but this is pretty big. This is pretty big, and on a closed basis, we haven't really scratched the surface of getting through this yet. So watch. And by the way, if we get a 70 break in momentum and a pop through, that's all the validation I think that you'd need. One other thing I want to say is that if you look at the intraday chart, you got a very clear opening range for the week. We talked about that as well. By the way, this will be archived, guys, as always, so you can go through it as if you see fit. If you need any other references to any of the other pairs we were looking at. JD says, very professional analysis, Mike. You and Jamie are excellent teachers. How do I gain access to SB's Twitter? DJ, I really appreciate that. It's always great to see you in the room, man. And, you know, we do our best, so I appreciate the feedback as always. Guys, if you haven't yet done so, and you're newer to the subscription service, guys, just go to the homepage. Click on SB Squawk sign up form. Just need you to fill out this quick form, and then after you do that, you do need to go to your to the SB Twitter homepage and just click follow. There'll be a follow button here. So it's a two-step process. First, you go through the SB Squawk sign up. This verifies your account here, and then just need you to go through Twitter and submit a request, and I'll be more than happy to make sure you get signed up on that. So that way you can see the SB Squawk feed on your personal Twitter handle as well. All right? Hey, you're more than welcome, DJ, and welcome aboard, my friend. He says you can read it like it us. Says ha oh says it us. All right, great to see you. Thanks for that. Sorry, I always slaughter people's names sometimes, but great to see you in the room. And welcome to SB, man. Good to see you on board. All right, guys. So that brings us into the 9:30 hour. That was the ring opening bell here. It looks like stocks are still opening kind of mixed. Wouldn't say to see a green or red at all, but certainly looks like mixed on the open here. Things are likely to get kind of quiet as you head into the FOMC. As I said before, don't expect too much earth-shattering stuff, okay? It's, you know, we've pretty much gotten the gist of what the Fed is saying. It's all data dependent, and I think we want to look more so to the CPI print later in the week on Friday to really check that out. Keep your eye on the index. You might see that spike again at that 100-day, 11,060, 11,054 is the actual beginning of the pivot range that we've been watching for a couple months. So that's the resistance. If we do plow through, and specifically if momentum makes it through 50, guys, you know, you could see a pretty pronounced rebound in the dollar. Not the expectation, but certainly we have to have our sort of levels prepped. So just some reference, if you will, on the scenario here. But largely speaking, looking for some resistance on the index. By the way, that 50 comes in I've drawn this before, that's why I know it, but that 50 comes in exactly at the opening range high for the month. So just keep that in mind. All right, guys, best of luck trading. I'll see you all tomorrow morning for the final webinar for this week at 8:30 Eastern, same time, same channel. Have a good day trading, guys. Cheers.